Hey everyone, if you have been listening to Empire, you know that Santi and I are fed up with unaffordable fees and frustrating transaction speeds that make the on-chain experience basically unusable. So the Arbitrum team reached out and they showed us the platform. They showed us what you can do on Arbitrum. Whatever you're doing, you can experience frictionless transactions at lightning speed on Arbitrum. So head over to portal.arbitrum.io and check it out. Scary stat for you. The odds of falling victim to online crimes are 1 in 4. Aura provides digital security protection to keep your personal information, passwords, online activity, and technology safe from online threats. For Empire listeners, Aura is offering 14 days free, plus up to 55% off an Aura subscription when you visit aura.com/blockworks. Terms and conditions apply. See site for details. You'll hear more about Aura later in the show. Hey everyone, Santi and I have been talking about Solana a lot recently, and we're excited to have a Solana sponsor of Empire, Marinade. Marinade is a staking protocol on Solana and the only stake pool that delivers auto rebalancing, MEV rewards, and automatic downside protection with their new protected staking rewards. Optimize your SOL stake with Marinade by hitting the link in the show notes. Big thanks to Marinade. We'll talk more about them later in the show. Are you tired of high gas fees? Well, I'm excited to let you know about Skale, a zero gas fee modular blockchain that's become a perfect fit for gaming and AI apps because of their instant finality and lack of MEV. Explore the Skale ecosystem today at scale.space/ecosystem and stay up to date with the gasless blockchain on X at Skale Network. That's at Skale Network. Big thanks to Skale for sponsoring Empire. All right, everyone. Welcome back to another episode of Empire. We have Dave Ripley, CEO of Kraken, for I think 12-month anniversary we just had. So, Dave, welcome to Empire, and congrats on the 1 year at Kraken, man.
Thanks, Yano.
Yeah. So, people think Kraken, they think of Jesse. I feel like, because he was just like a big pioneer. When I think of the early people in crypto, it's like the early founders. It's what, Mike Belshie. It's maybe Eric Voorhees, Charlie Shrem you could throw in there, and you got to put Jesse in there. Brian, sure. Obviously, Armstrong.
Yeah.
And so I think when a lot of people think of Kraken, they think of Jesse. You were put into this CEO role April of 2023. What is the best part about the last 12 months, and what is the worst part of the last 12 months?
Yeah. Well, gosh, a lot to cover. I mean, you pick any 12-month in crypto. I don't care what it is, bear, bull.
It threw you just into the heart of like a horrendous bear market.
We've all, as the saying goes, we all age, five times as quickly, given all the excitement in crypto. But yeah, first on Jesse, I mean, I'm glad you hit that. I mean, he is. I mean, he's, that one of the top few pioneers in crypto, top few entrepreneurs. Frankly, he's an incredible entrepreneur generally, founded a previous business before Kraken, really only ever been an entrepreneur in his life. And so he's just, really, really incredible from that standpoint. And then also, like you said, one of the top few pioneers in crypto, and he's poured his heart, life, so much into the industry generally. I mean, of course, Kraken, but honestly, it's the industry generally, which is, in line with our mission, which is to grow cryptocurrency adoption. And frankly, one of the things that I think is important about how we view that mission is we view ourselves as having a role, and not. Kraken's not going to do it alone. That's like the antithesis of what Bitcoin and crypto are. It's a community, it's a decentralized network, so it takes all kinds of participants. But yeah, I guess get into the meat of it. Like what's the past year been like? Well, so first off, I've been in crypto and, I've been at Kraken for a really long time, and then even in crypto for even longer than that. So I started back in 2013. And I founded a company, Glidera, that was acquired by Kraken in 2016. And so that, puts me at like 7.5 years or so at, today, as of today, and at Kraken. So I've been with the company for a long time. Certainly know the business well, know the industry incredibly well.
Do you remember what employee number you were?
That's a good question. I don't know. We were probably not much more than 50 people when I joined. I mean, there was only a handful of engineers. there was a decent, there was maybe a couple dozen people on our client engagement team, and at least, and then all the other functions kind of probably added up from there. So yeah, so it wasn't, I wasn't the first dozen or so, but yeah, it was fairly early. And of course, there was probably a handful of people that had, joined Kraken and then left. And so if you add those up, maybe I'm getting closer to 100 by that point.
Nice.
As far as
So what's been the, maybe I'll rephrase the question, like the toughest part about being CEO of, I mean, the big exchange, like there's probably a handful of big exchanges, right?
Yeah,
There's Binance, OKX, Coinbase, Kraken. I'm sure I'm going to upset someone because I'm missing someone, but like you guys
sure.
are in the select few. And then in the US, it's really, I think of like Coinbase and Kraken. Like
Yeah.
what is the toughest part about running a large crypto exchange?
Yeah. Yeah. Just on that, like, I mean, you pretty much summed it up correctly. We have really significant business in US, Canada, Europe, UK, Australia. Those are our major markets, make up a huge portion of majority of the business. Really Europe and UK first. That's where we launched initially. First place you could kind of like buy Bitcoin with euros domestically, and then with British pounds as well. So, but yeah, I think, look, I mean, I think this past year, it was really marked. I mean, so one, it was bear market, right? And each bear market has been has been unique in different ways. And this is my third bear market, and coming into this one, I kind of came in with like a little bit more optimism and chip on my shoulder, saying like, hey, we've done this a couple of times before, we got this, and so forth. But lo and behold, no, this one brought like real meaningful and unique challenges. And what really were those? Well, on the heels of the FTX and other failures, you kind of had this huge ramp up in I don't know, pushback. Certainly on the regulatory side, that was a big piece. A bit of like the choke point 2.0 for the banking banking of crypto companies, and then of course just the public perception, right, of like, hey, there are these failures. I mean, I think a number of people in various different places, some in U.S. government, like looking to kind of like pin this on Bitcoin and cryptocurrency itself, as opposed to failed trusted third parties, which, by the way, is the incredibly ironic piece of this, which is, the whole premise of Bitcoin and cryptocurrency is to move away from trusted third parties. And here are these, failed trusted third parties, kind of giving Bitcoin and crypto a black eye, which is truly ironic, because, the whole premise is to someday move away from those. I mean, of course, it's going to take time and so forth. But anyway, so these are the various different, pressures that arose. And of course, I mean, here in the US, there's it is really ground zero for where there's the most pressure, chaos, whatever. And kind of simultaneously with this period, many of the other geographies, like Canada specifically, Europe as well, had already been like marching forward with various different regulatory structures, right? Canada kind of had their FTX moment several years ago with Quadriga failure, and that kind of pushed them to put in their licensing structure. Of course, in Europe, they have the VASP registrations, and now followed by MiCA. And so there's already a lot of advancement, which is, in some ways, I mean, look, there's of course, trade-offs. And in some ways, the additional clarity is hugely beneficial, particularly as we look at it vis-a-vis the United States. But of course, there's overhead and work and all these things needed to do to kind of like go through licensing processes and so forth. But the reality is all of these things kind of combined led to really a significant amount of like lift on the business, whether it was navigating choke point 2.0, basically working with existing bank relationships, establishing new ones, or whatever it is, working towards obtaining licenses where there's, new licensing. And then unfortunately in the US, basically dealing with litigation. And of course, the SEC and everything they're up to here. So it's really been a meaningful, is just presented a meaningful set of, things that, the business has had to do. Again, the US being ground zero with like the activity here. But I guess the upside is, for the most part, Kraken has navigated all of these challenges quite well and frankly, better than many of our peers out there, right? And so we've kept all of our, fiat rails up in custody, and we've, actually went for licenses. And so like take, for example, Canada, we went for the license there. A number of other companies exited. Our market share position went from like, mid-single digits up to like nearly 50%. And, so we just like have seen really significant success, over this period in terms of market share over the 2023 period, despite that the overall market, was down significantly.
So I want to zoom into a couple different. I did happen to talk to a couple Kraken employees and some investors as well to prep for the podcast. And one interesting thought. So seeing kind of Kraken and Coinbase grow up these past several years, one thing I've always thought is, so it feels very clear to me that Coinbase kind of owns the retail, or Coinbase I think does better than Kraken in my humble opinion on the retail side, but
Yep.
Kraken's pro experience is incredible. I was mentioning before this, a lot of Blockworks employees actually use the Kraken Pro, are like very
Yep.
power users of Kraken, I would say. And I was asking a Kraken employee, why don't you guys just copy what Coinbase has done on the retail side? They say, look, you
Yep.
don't get it. We don't want to do that. If you look at
Yep.
our users, we actually have kind of different types of users. We have more like prosumer users, whereas
Yep.
Coinbase has the 23-year-old who just graduated college and just bought $100 of Bitcoin. So
Yep.
this was from a random Kraken employee. I'd be curious to get your
Yeah.
take on this Coinbase versus Kraken dynamic.
Yeah, I'd say that's partly right. I mean,
Yeah.
if, for what it's worth, the piece that's absolutely partly right is yes, we have focused, meaningfully on Kraken, Kraken on those more professional, advanced traders and investors historically. You mentioned the pro experience, but we were one of the first to, like, if you dial it back, one of the first to go multi-token, one of the first to offer margin. We of course, moved into derivatives a while ago with our futures product, and so we have in fact invested meaningfully in that area, and we'll continue to do so. We have more tricks up our sleeve for that particular group of clients. We think that is a really strong part of the business, and what it means is that if you compare Kraken to Coinbase or some of these other companies are. How the stickiness of our clients, the retention of our clients is actually much stronger. So when we see kind of these various different bull bear cycles, we don't see as much pullback from our clients over those time periods. And then furthermore, there's just given the increased level of activity, there's of course a stronger relationship, higher ARPU, all those types of things for our clients. But going forward, I mean, I guess maybe where it's like,
can I actually pick on one thing? What is the ARPU? What is the ARPU comparison of Kraken versus a Coinbase user? Do you know that?
Yeah, I mean, there's a few different ways to look at it. Like, do you like strip out institutions, or do you keep them in, and a number of these different things? And we don't really disclose like the specifics, but you could think about it as like several multiples.
Really? Wow.
Like
That's interesting.
3 to 5x, and it's for this reason though. I mean, I think.
Right.
Probably like, the strong investors out there probably would almost guess this, if you just described our type of, client where we're the strongest and so forth. But the reality is that we have, since a handful of years ago, launched a product and experience that is much more catered towards, consumer retail and individuals. And, the way we're thinking about that product and its approach is, look, Coinbase, of course, has been in that segment really deeply for a long period of time, and they of course have their reputation. But I think there's a great opportunity for a lot of the things that we built in Pro to like consumerify them and make them really simplistic. Whether it's um, things like margin trading or any of these types of things, and find a way to make it really simplistic and understandable, and bring the right education and service and all these other pieces for consumers. And we think that that's an opportunity out there, just given that we've done all of these things successfully for an advanced trader, and there should be an opportunity to do that more for consumers. So I do think going forward, we have been growing that segment, which is kind of like the non-advanced trader, more of the individual consumer, retail investor, or what have you. And I think we're already seeing really good success, really good growth there. And I think there's a lot more that we'll continue to do to expand in that way. And we'll probably hopefully do it in a slight somewhat of a different way, right? Where we leverage some of what we built on the pro side and in these various different things to really have a nice experience for clients.
Nice. One thing that I've noticed you guys doing differently is Jesse was very anti-marketing, as someone who tried to
Yeah.
sell him sponsorships and ads for many years and was never successful. Uh, and he
Yeah.
brought on this I'd call it a fancy CMO from
Sure.
I think Spotify, Mayer, I think is his name,
Yeah.
who seems incredible. And you guys have
Yeah.
done these big outdoor, like out of home campaigns. I think in the tube. You've
Yeah.
done like some sports thing, like you've done Williams. You guys brought your Williams car to permissionless last year, and it was got this like big
Yeah.
booth. Like you're doing the Bankless sponsorship. Like how has marketing been? This is really the first I'd say 12 to 18 months that I've ever seen you guys market. How has
Yeah.
that been?
Well, that I'm glad you asked, because it's the part that I left out, maybe not intentionally so, kind of just when I was talking about the
Sure.
most recent 12 months and the market share gains and so forth. So yes, we were navigating a number of these challenges with banks and regulators, and going for licenses and staying in markets while peers were pulling back. But the other thing is that you hit the nail on the head. We started marketing for the first time ever, and okay, we had done some marketing before, but really not significant. And I'm glad you mentioned Meyer, Kraken Chief Marketing Officer, who's been here roughly a couple of years now. And really, that first year was a lot of really foundational team structure, starting to move the ball forward in a few different areas of marketing. But then in the past 12 months, we did actually ramp up, and so it wasn't a huge amount of spend that we brought during this bear period, but we actually increased our marketing spend meaningfully into the bear market, in terms of absolute, not just in terms of percent of the total, but even in terms of absolute dollars. And so that was and we were doing it, with the right team. And we did continue to do it fairly, I don't know what the right term is, but, methodically, or we look to really build in the right way here, as opposed to just kind of jumping out a couple stadium naming rights deals or what have you. But it's really all of the different components, and so that was also likely one of the big drivers of why we saw positive market share over that period. It was like we were going in the opposite direction on marketing as everybody else, and so we really saw it with a strong new client acquisition and a number of really good things over that period.
Yeah. What's the old saying about marketing? It's like 50% of your marketing works. The problem with marketing is you just can't tell which 50% of
Right.
that is
Well, it is
working.
challenging, right? I mean,
Yeah.
and there's an ebbs and flows there on the marketing side. We kind of went from, a world, I think back in the day, before I was even dealing with, where there was no clue on, you do these ad campaigns and TV ads and radio or whatever it
Yeah.
was. And then we went to a world where there's really tight performance marketing, paid advertising, direct to client. And I think that's being somewhat challenged now, just given how much data is, shared by the various different, companies out there that you do paid advertising with. But nonetheless, yeah, really, that certainly is a challenge. I mean, that's almost the whole game of testing and trying a number of different approaches, areas to advertise. I mean, I guess it's a little bit more on the growth side and product side, and then you make some of the bigger bets on the brand marketing side.
Yeah. I want to talk about some of the products in a sec. You guys had You had a tweet about. I want to talk about Kraken Bank. I want to talk about the wallet that you guys just rolled out. But before I do that, if I were you guys, just the last thing on Coinbase is like Coinbase is public and you guys aren't.
Yeah.
And I'd be looking at the success of Coinbase. So I've got their their stock bottomed out at like, I don't know, $50, $60. It's now trading at 225. They've got earnings, I think, this week, market cap of 54, 55 billion. Like, if I were the board of Kraken and I were if I were Dave, I'd be like, all right, like this is kind of our, we've been private company for 11 years. Like, this is our time to
Yeah.
shine. How are you thinking about just like a liquidity event, either an IPO or like an exit this cycle?
Yeah, I mean it's of course out there, So one is I don't know, you've probably heard this song and dance from many others that you can only get so specific on, these types of plans. So can't really share anything. But certainly it's out there. I mean, from a financial profile standpoint, Kraken is, big and profitable and certainly the size, larger than many other public companies out there. So, that exists. Of course, there's more to it than just that, to go public, and there are also implications of it. But I mean, it's one of the many things out there, with regard to investing, the private or public side that is absolutely on our list as, something in the future.
Do you think it's a higher likelihood that you guys sell? Or I guess that's the range of buyers is actually pretty small because you guys have such a high valuation. But like, is it a higher likelihood that you sell or that you IPO?
Just taking the topic directly on, a sale or an acquisition. I mean, there are a huge number of things to get right on such a thing. And you're right, the valuation's higher, and so that leaves leaves us at a place where it's like maybe a lot of traditional finance companies that would have that level of, pocketbook to go and buy. Of course, they're not ready to come into crypto anyways. I mean, you think about like a big bank or whatever, and then there's all kinds of different questions on whether Kraken would be a great fit for those types of companies or not, and there's reasons why you might question that as well. So yeah, I mean, I think it's I think while obviously if there was some like big M&A offer inbound, it's not like we would just like I presume ignore it out of hand, but there's, this isn't the goal for the business. We think like driving Kraken as a, as a successful business, it can grow to be incredibly successful. Already has, and will continue to grow to be incredibly successful all on its own without necessarily going down, the M&A route. We think we just have like a huge number of, opportunities to really make it, an enduring, incredibly successful business. Certainly irrespective of, being acquired by somebody else. And then even irrespective of, IPO as well. And that's like, number one, what we're focused on. And we know it to be, possible and the outcome that's going to happen. So that's where we're really driving.
Nice.
Yep.
Well, that's exciting, man. How do you describe Kraken to, I know you did not just tell me anything about an IPO, but like, I'm going to make up that you guys were IPOing. And I'm trying to almost picture like you at a road show and trying to describe Kraken's business. I imagine it'd actually be quite tough because the crypto exchange, as I see it, kind of sits in the center of the spectrum. On the right-hand side of the spectrum is like moving more and more on chain, like the self-custody wallet that I want to talk to you about and all that kind of good stuff. And then on the left side of the spectrum, there's like, you guys rolled out this like state chartered full reserve bank. Like you're, that is like, that's a bank. That's the other side of the spectrum. How do you describe, like someone sits down with you, large institution, and they're like, Dave, what is Kraken in like 5 to 10 years from now? How do you describe that?
Well, look, I mean, like the jobs to be done for our clients, actually involve both of those types of things. So it's really the first piece is like what I'll describe as building the bridge. I'll come back to that. Number two is bringing our clients more investable, tradable assets, more access to various different, parts of the crypto ecosystems and so forth. And then the third piece is just giving them an incredible experience, incredible user experience, via products, also for us, service, to be able to navigate it all, understand it all, digest it all, In this, cuts, as we talked about before, for professional traders, an incredibly fantastic pro experience. But then, for the other segments, we go after just the same, providing them, the same incredible user experience that, fits their needs and so forth. So those are the three jobs to be done. And in these three, I think it's like we basically get at this dynamic where it really ends up being both. And so first, the bridge. So what's the bridge? The bridge is from TradFi to crypto, right? We're this bridge from this legacy system to this new incredible decentralized ecosystem that is growing at an incredible rate with tons of new innovations and so forth. But in order to be a bridge, it's kind of a least common denominator. There's a ton of different pieces that are really necessary to integrate with TradFi. I mean, in order to do that, reg compliance, banking relationships, security is fundamental to all these different pieces. Custody actually ends up being a meaningful piece to really pull off the bridge, because that's what's necessary in order to actually provide a way to get from fiat to crypto. And so all of those foundational pieces of being a bridge are really meaningful. And yes, that's where like a custody license comes in. And a number of these different pieces that we do, we spend a huge amount of effort and resource on regulatory compliance in all of our major markets, right? And so this bridge that we talk about is really, and I guess it almost pulls in the geographic piece, which is, hey, for us, that's Europe, UK, US, Canada, Australia. And we'll potentially add to those geographies over time, but our model is to go deep, is to support if we go into the market, support the domestic fiat currency, localize, provide that. All these things lead towards kind of the last element. They provide the foundation to have an awesome client experience. And so we're kind of thoughtful about when we're going to expand and add to that, because it is a lift to do so. The second piece is where you're kind of the other side of the coin on the question is like, look, we want to build more and more access to more and more investable, tradable assets in crypto, and more access to all the things you can do in crypto, which for us is a lot. A lot of it is, it's a value network, a financial network. A lot of this has to do with investing, trading, finding ways to earn, all these types of things. And a meaningful way to do that, I'm sure we can add more, tokens to our centralized exchange and provide more custodial staking and so forth. But a big way to do that is to actually move on chain. This is an open ecosystem. Innovation is happening quickly. We think it's going to accelerate. One of the great things about kind of like the two more meaningful use cases, I'll say, of the last cycle, DeFi summer, and then really NFTs, but kind of digital art and PFPs really were the trend of where we saw the growth. They were both meaningfully on chain, which was awesome and different than previous cycle where it was like ICOs and centralized exchanges, and that's like how it it drove. So I think we're looking forward to that happening even more so going forward. And so, for us, the wallet's a meaningful piece of this, and providing access to all of these. Whether it's, trading and investing into the long tail of cryptocurrencies that we would never list on the centralized exchange, just, from a resource standpoint and, whatever else it is, to, a number of other things in the crypto space. And so I think both of them really are meaningful, because we're, that bridge is foundational on the first job to be done. And then the second one of, providing access to more of that definitely means going on chain.
Nice. Farthest end of the spectrum is Kraken launching an L2. So I just have to ask you about that. When I saw you guys launch the self-custody wallet, the first thing that came to mind was, that's really cool. I got to check that out. The second thing that came to mind is, Kraken's got to be thinking about launching their own L2 on the success, seeing the success of other exchanges
For
doing
sure.
that. How are you thinking about a Kraken L2?
Yeah, I think a couple of things. So one, first on the wallet. Absolutely, we're totally excited about that. It's like one of the
wallet
first.
Looks great, by the way. It looks really, really good.
Yeah, the UX is incredible, which is definitely something that we're really really looking to hang our hat on, and really meaningful piece of this company going forward. It's open source. A good portion of this stack is open source, which is different than many of the other, I think maybe all of the other kind of like similar peer type companies that have launched wallets, that have launched a crypto wallet. But yeah, with regard to your more significant question there on an L2, yeah, for sure. I mean, I would say like L2s in general are, you might say that's like one of the big areas of like this cycle, to the extent that we're kicking off a new cycle here. It's one of the big areas, right? I mean, there's a lot of investment in L2s. There's always been a lot of investment in scaling, whether that's base layer or additional layers. And there's certainly a lot of activity here. And I think one of the things and there's of course this trade-off when you go L1, L2, with respect to security, finality, all of these various different types of things, you get more, transaction throughput and scalability. And I think that's actually meaningful for the industry to continue to like test that spectrum, between the two and find the right balance. I mean, there's no question that like the Bitcoin mass, most, I could say like secure, decentralized, whatever it is like the core of what this value brings. But like looking to think about layers on top of that, whether it's Lightning or, certainly anything else on Ethereum or Solana or whatever, L2s are really meaningful. Where does Kraken play? Yeah, we haven't announced anything or, anything specific with regard to like, building our own L2. But I'll say for sure, much the same as I mentioned before with regard to, jobs to be done and so forth. But, being part of this in some form or fashion is absolutely, a goal for Kraken, right?
Nice.
Whether it's providing access to many L2s, building our own L2 and sequencer, any of these types of things. I mean, we would like to think that, we approach a lot of these things thinking, fairly broadly of the different opportunities out there.
All right, I mentioned them in the pre-roll. Now I'm going to bring them up again. It's Arbitrum. Santi and I are really fed up with these high fees, and we're really excited to have teamed up with Arbitrum for the next couple of months on Empire. As the leading Ethereum scaling solution, Arbitrum now powers hundreds of decentralized apps across DeFi, perps, NFTs, gaming, and a whole lot more. The team has showed us everything in the ecosystem, both now and what's to come, and we're really, really excited about it. Arbitrum allows both daily users and developers to interact with Ethereum at scale with low fees and faster transactions. The way the team got me excited was through portal.arbitrum.io. So my call to action to you is to get started by visiting portal.arbitrum.io. Go experience on-chain like it was meant to be. This episode is brought to you by Aura. Online crime is growing at an alarming rate, and cyber criminals continue to find crypto investors like the Empire community lucrative targets. We've all heard of someone who's fallen victim to some sort of online attack. Aura helps prevent against that. For example, if your online accounts or your passwords were leaked online, or if someone tries to open a bank account in your name, you'll get notified in real time about that. With 24/7 US-based support, Aura's team will be there for you to resolve fraud issues, even if it means getting on a three-way call with your bank at midnight. Not saying I had to do that, but I might have had to do that. So aura.com/blockwork. Sign up for the 14-day free trial. Terms and conditions apply. See site for details. Aura is the new standard in digital safety. Check them out. aura.com/blockworks. Free 14-day trial. Hey everyone, Santi and I have been talking about Solana a lot recently, and we're excited to have a Solana sponsor of Empire. Marinade is a staking protocol in Solana. I remember when they launched, I think it was back at a Solana hackathon, and they were funded with this 80K grant. It's super cool to see how far they've come. They're the only stake pool today that delivers auto rebalancing, MEV rewards, and automatic downside protection with their new protected staking rewards. You can stake natively or liquid stake with Marinade and get the same high performance delegation strategy that thousands are using already to stake your soul to over 100 of the best Solana validators. Marinade has been live for over 2 years, and they have audits completed by 4 of the top security firms in crypto. The delegation strategy is a first of its kind. So if you're staking your Solana, if you want to start staking your Solana, if you want to get some yield from your soul, start staking today with Marinade. Go hit the link in the show notes. Big thanks to Marinade for everything that they've done in Solana staking land. Go check them out. Go stake your Solana with Marinade today. Hey everyone, Jason here. I know you've been hearing a lot about the intersection of crypto and AI, and that's why I'm really excited to share our newest partner and sponsored empire, Skale, a high-performance modular blockchain that's revolutionizing gaming and AI. With zero fees and instant finality, Skale's unique architecture allows for massive scalability and has already saved users over $6 billion in gas fees. The 5 main takeaways that you need to know for Skale: 1, zero gas fees. 2, Skale has instant finality and lack of MEV. 3, the zero gas fee model of Skale is really important for blockchain gaming adoption, as gamers don't have to pay transaction costs or have the SKL token. 4, Skale is multi-chain. This design allows for nodes to be combined to create chains and for individual subnodes to actually be removed and relocated, which creates greater security and collusion resistance. And 5, Skale has become a really good fit for AI dApps because they're fast, automated, zero fee transactions. Big thank you to Skale for sponsoring Empire. We're excited to partner with you guys. Bridge over to Skale if you're listening to this at scale.space/ecosystem. Follow the journey along with Skale on X at Skale Network. That's at Skale Network. Big thanks again to Skale for sponsoring Empire. You can see like the revenue, or the whatever you want to call revenue, expenses is probably the wrong way to look at it, emissions and fees or whatever, of base. And I was like, oh man, Dave's got to be thinking about L2s in somewhere or another. So
Yeah, there are a lot of fees flowing through that.
there are
for
a
sure.
lot of fees. Yeah.
Yeah, we'll see the late. Yeah, it'd be interesting.
How do you weigh the, like, I mean, yeah, like looking at the fees, it's obviously ridiculous. They're making a lot of money from it, but like the other side of that might be there's like concern on the regulatory front. And you guys, I mean, you had like a few run-ins with the SEC. I think the
Yep.
first one you settled, the second one you pushed back and said we're not going to settle. I'm sure I don't know,
Yep.
I really don't understand how the game works, but like how do you weigh the like pros? We have an L2, we have our own chain, we can either capture the MEV or the fees or whatever it is. Cons is like makes it harder to IPO or get acquired or
Sure.
something like that. How do you weigh those?
Yeah, I think. I think when it comes out, just to like maybe just like take that IPO thing one more really specifically, like, yeah, look, for sure we're oriented towards serving our clients, building the biggest business we can, achieving the mission, all those types of things. And an IPO is more of a means; it's not the end game at all, right? And so that's how that factors in. But that, irrespective of that, there's a meaningful regulatory compliance question for any of these new innovations out there. The way it works is we have an enormous team that spends all their time on this, right? We have 60-ish legal team.
You guys have 60 people on legal now.
Yeah, 250 plus.
Is Marco Santori still running that?
He is, yeah.
Wow.
He runs that legal team. 250 plus on the compliance side. Just really a meaningful investment in this area. And when you swing to the legal side, when we think about these new technologies and innovations, it's not like there's any, like, for the most part, think about like an L2 or whatever, L2 running a sequencer, there's just nothing out there with regard to specific regulations and guidelines or what have you for a number of these different things. And so you kind of have to say, like, okay, well, let's look at the actual law here and do that, make sure we're, applying that law to any of these new innovations. This is really what any innovator has to do in that area that's poking around something that's like, somewhat regulated or whatever. And so, that's what that team does. They do an incredible job of it. And, they of course partner meaningfully with our product team, business teams, and so forth to, iterate and understand what we're actually trying to build, and might even influence it to some extent how we build it. Of course, it influences whether we build it or not, but
right.
It definitely influences how we build it. Also influences where we offer it. So this ends up being, given laws are tied to governments and governments are, countries. And so it ends up being a geographic question as well. So yeah, there's a lot there. Like we often say, like much more than you would have probably ever envisioned, long ago.
By the way, Marco Santori still has there's a podcast he did in, I think it was 2017 or beginning of 2018 on Laura Shin's podcast, Unchained. Still one of the best episodes. I remember that being like a very
Hmm,
pivotal episode for me in
interesting.
2017 when
Oh,
I was like,
really?
oh, yeah, I was like, oh, these. I remember ICO. It was like during all the ICOs, and Mark was like, yeah, a bunch of these are crap, but like there is something here with these tokens. I was like, oh,
Yeah.
okay, all right. So
Yeah, it's interesting. I mean, that really was the outcome, right? I mean, most of it. I mean,
yeah,
so
yeah,
many of those 2017
yeah, yeah.
ICOs were ridiculous, but
Yeah. So what I mean, just zooming out from Kraken, because I'm going to stop annoying you with trying to unveil your top secret Kraken plans here. What do you think ends up happening to centralized exchanges as more and more activity goes on chain?
yeah, I mean, well, it depends. I mean, it depends what type of centralized exchange you're operating, I think. Um,
Mm.
so I think for a centralized exchange like Kraken, where we have this business where we're a bridge, and then we're also looking to provide access to as much of crypto as we can, we become like, you know, increasingly successful, and it just continues to, we just hit. I mean, it's escape velocity, and we just grow and grow and become really successful because look, I think more and more activity on chain is awesome from Kraken standpoint. And we even think that's awesome for our kind of like core centralized exchange, i.e., bridge business, right? The more use cases there are, the more reasons there are to buy, invest in, trade, use crypto and in other decentralized assets. I mean, the more and more significant the demand is for
Yeah.
all of Kraken's products. I mean, none of them really go away with any of this, and particularly the bridge because there's however many I don't know what call it 500 million people have touched crypto so far, but a huge portion of those are just like I bought a very small amount of
Sure.
Bitcoin or Ethereum or whatever, or Dogecoin or whatever it is from the last cycle, and you barely call them in the ecosystem just yet. Just really scratching the surface. And so when we think about the number of people out there, I mean, they're all going to be coming from TradFi, right?
Yeah.
They're be coming with their fiat, looking to get away from fiat, looking to move to crypto. And that's what that's a big part of what this bridge means. And so I think that's going to be incredibly successful. We think the more activity on chain only expands for Kraken. We will also provide direct access to a lot of that stuff on chain with great security, great service, all these various different things. And so I think it really is a fantastic outcome. And we were encouraged by every I mean, I specifically, I mean, when I go look at the volume numbers for decentralized exchanges, I'm always like cheering whenever I see those numbers
Hmm.
move up. And
That's
even if
cool.
I see them move up as share of total vis-a-vis centralized exchanges, I'm like, fuck yeah, this is good. I'm like, this is what we
Love
want to
that, Dave.
see.
Let's go.
Yeah. Yeah, I mean, it really is. And so, and that's true of other use cases as well. And so I mean, I think that's something that's, you know, Krakenites at our company really get this and
Hmm.
understand this and root for this just the same. Yeah.
That's cool. What
Yeah.
do maybe shifting gears a little bit, what do you think about the NASDAQ, or was it NASDAQ or NYSE? I think it was NYSE is considering shifting to a 24/7 trading model. Here, wait, let me pull up this.
Yeah. I think it was NYSE. I'm
Was
not
it
positive.
NYSE?
Maybe
Oh
it was
yeah,
both.
okay. So NYSE.
I think it was the
Yeah.
first. They were the first ones to mention it. I think. I'm not.
Yeah. Okay. So the iconic bell of the
Yeah.
NYSE has been a symbol of the financial world for the past century.
Yeah.
Every Monday through Friday, 9:30 to 4, bell rings. The NYSE is now contemplating a move towards 24/7, 365 stock trading. A shift
Hmm.
that would mean the stock market never closes. What? What do you think about this?
Yeah. I mean, I guess two things. Kind of surprising that you haven't seen this earlier.
Right.
Um,
Like,
I
oh, you
haven't
can
seen them say so,
double your
which I don't
revenue,
know. I mean,
triple.
maybe there was like some small mentions of this in pockets of NYSE or NASDAQ or CME or whoever, but it doesn't seem like it's been like something really stated with like authority or some level of like, hey, yeah, this is really something that should be considered. Yeah, it's kind of surprising. I mean, 24/7, 365. Let's just, for a minute also note the fact that like 24/7, 365, like is a very local country way of thinking about something, right? Because not everyone has the same 24 for sure, right? We're all on different, time zones across this whole planet, and this is a very global world, and we're not even all on the same 7, right? Some countries in the world have different days for weekends, and we're certainly not on the same 365 with respect to holidays and seasonality and all these types of things. So it's like a very non-global way of thinking that 24/7, 365 by definition is like, hey, this means global, right? And thinking in a world that is not global is, I mean, it's very years ago, decade ago mentality, I think. Because the world is going to become more global. This is one of the reasons why cryptocurrency is Bitcoin, cryptocurrency are such just like meaningful innovations, is because they solve for this global dynamic, and they probably solve for and this is where I get to what does it actually mean for NYSE. They solve for it in an incredibly elegant way by just like creating a new system that is like actually built to be global, whereas kind of like trying to retrofit or upgrade this an existing system to be global 24/7, 365 might not be that easy, right? So they can do it, but the only way to get funds on and off those on and off NYSE might still be kind of held up in the old 9 to 5 Monday through Friday world.
Right, you still got the brokers.
You got the brokers. I mean, you have the actual fiat money movement that
It's not
isn't
like
going to be
users are going and trading on NASDAQ.
right.
It's not like a crypto
Right.
exchange.
Yeah. So I don't know. I mean, hey, but maybe they can start unpacking that and incrementally moving in that direction and so forth. But I don't know. We'll let them sort that out.
Okay, fast forward 5 years from now. Do not NASDAQ and NYSE support crypto trading?
Oh, what was the time frame?
5 years?
5 years? Yeah. I mean, I think pretty likely. I would say, yeah, I would say fairly likely. I mean, one of them, well, let's see. Wait a minute. Both of them, I mean, all three of them are like there's 4 big ones, right? There's NYSE, which is owned by ICE. There's NASDAQ, there's CME, and then there's SIBO. You already have SIBO in and now exiting, I think. And I think they've done that a couple of times. CME's kind of been in there with futures for a while now. NYSE, there's ICE, and they kind of like founded, backed. NASDAQ has, actually been.
But they have such a bad experience with Backed. Like
They,
Backed
they did, and SIBO's shutting down as well, right? I mean,
like
as far as
Backed
I
is gonna
understand.
like delist any day now, it looks
Yeah.
like. So
Yeah, exactly. So, so it's an interesting dynamic, right? Like, I think the answer is, and we know, just from like various different articles out there and so forth, that NASDAQ has been like building and investing in this area, although I guess maybe not launching or pausing and so forth. So I think that, but the reality is it really isn't due to adoption in the ecosystem. We see the ETFs just came out with huge adoption by a number of big TradFi in the U.S. Those have been meaningfully successful, most would say by any measure, in terms of adoption and so forth. So I think there's really a couple things at play. One is, it's not necessarily that easy. I mean, it's not just that easy to like snap your fingers and launch one of these businesses. Maybe you could build the products to some extent.
this sums it up nicely for anyone who's not watching.
Yeah, that's what I was talking about. Yeah.
For anyone who's not watching on YouTube and just listening to the podcast, NASDAQ is repurposing their crypto tech to become carbon technology.
Fascinating. Yeah.
NASDAQ will repurpose crypto tech to develop carbon markets. Exchange operators scrapped crypto custody plans this summer. Tech will be redeployed, co-president says. So
yeah, exactly.
Yeah, it's like classic cycle behavior, and they'll come back in. So
the part of it is probably a cycle. They're looking at like, okay, what's the potential demand out there? What portion of that demand are we going to get? Which I think is like the biggest biggest question. And then, what's all the investment required to, to do this? And, they kind of ebb and flow on their analysis there. And I think they move in and then they realize, maybe how hard some of this is to build. And then they probably realize also like, hey, we're not just going to like magically get demand for this stuff right out of the gate. Because there's awesome companies like Kraken and our peers and so forth that, have already solved tough problems and have built products in a kind of like crypto first way that, we really understand these individuals and all the various different segments out there. And I mean, this is Kraken and some of our peers and so forth. So I think there's a big part of it is that. But I mean, look, I don't think it's like a complete null set on whether any of these like traditional financial services firms are going to be able to like enter and be successful. I think they already have intention to enter. Bitcoin crypto just going to continue to grow. The incentive to do so is going to continue to be there. We see some that are, finding places of success. I mean, I would say CME futures have been successful on this kind of TradFi side. I think many of, Fidelity is kind of like long been around the space and is now seeing even more success with their ETF. Obviously, BlackRock jumped out. And so, while it may not be, NASDAQ apparently exiting now, you don't point to them as successful, but I think there are some companies and it, it seems to be like generally some that have like come with like, different offerings. I mean, to the extent you call the fintechs TradFi companies, they've seen some success. So Block, Cash App, Revolut,
right.
PayPal, great. Interesting. They kind of came with their stable coin, which I think is, interesting that they made that move as opposed to just the straight up simple buy Bitcoin and crypto in the wallet.
You have any advice for, I mean, you've been in, so you started Glidera and then got bought by Kraken?
2013. Yeah.
2016.
Yeah.
Do you have advice for folks who maybe this is their first or maybe their second cycle being a founder or a CEO
Yeah.
or an operator? Like, how do you think about operating through cycles? And like how much to push
Yeah.
on the gas right now? When do you actually ease off? Like, do you ease off before
Yeah.
others are easing off? Like, how do you think about just operating through cycles?
Yeah, well, this is one of the things that we've like really been dialing in more and really thinking about intentionally, much more so recently. And somewhat driven by learnings from previous cycles and so forth. First off, I think it's like really challenging to build a business in this space where you experience these
Gross
periods.
understatement.
Yeah, exactly. I mean, for all kinds of reasons, but just on this particular one, is one of many. But the scalability piece of like, hey, we have this business that's going to do a 10x or even 20x within a 12-month period. First of all, meeting that demand and handling that demand, that's a huge set of challenges. But then on top of that, it's going to pull back 50% plus potentially in with respect to client demand and what have you for a subsequent period that immediately follows that period. This is really actually quite challenging. From a there's the question on technology platform, and can your platform just simply scale, and or does it come to its knees and people are unable to access, log in, see all kinds of different errors or what have you, bugs, different things crop up once you try and put 10x to load on a platform. And so that's one where we've invested like meaningfully in, I honestly like really meaningfully. Like we went from like almost, I would say like, unfortunately, I would say almost worst in class back in like the 2017-ish time period to best in class. Like if you look at our uptime, our stability, our response time, all of these different types of things, we're like absolutely market leading now, which I don't know if like folks really understand, and we've marketed it very well because we did come from a place where we probably had more issues in the 2017 bull run than most others, and that probably sticks in some people's minds and so forth. But like we've invested meaningfully here, and we're like really top of the market in terms of tech platform performance.
Yeah, I'm convinced there's no good way to market that. By the way,
it's tough, right?
Yeah.
I don't know.
The best marketing is when it just works. I'm not sure if you can market that. Yeah, it's very tricky. It's really like I think probably the hardest part of my co-founder's name is Mike, of Mike and my job oftentimes is like,
Mhm.
I remember in the heart of the bear market, we were telling the company we need to hire now. Like
Yeah.
as soon as we saw little signs of growth in like end of summer of 2023, we're like, we're a foot on the gas. We're starting to hire now. And we're like,
Mhm.
I know it seems insane, but we need to
Yeah.
hire now because the talent pool is like the best we're ever going to find. And then it's going to get insane to find talent. And now we're saying the opposite thing, which is like, well, we're still hiring right now, but like at some point in like, let's say 12 months from now, everything's
Yeah.
going to be ripping, everything's going to be going amazing. And we're going to have to say, hey, like this is the time to start slowing things down.
Yeah.
It's a very weird dynamic that
It's
just needs to.
it is. I mean, and there you take us to like the next piece of this equation, which is much more difficult to scale people in a team than it is to like build
Yeah.
a technology platform, running in data centers
Yeah,
that you
yeah.
can, scale 10x, right? And so we think about this in like a few different buckets, but maybe I'll just like break it down to a couple ones. One is we do have a portion of our team that is like very much impacted by the an increase in 10x client demand, and so these are individuals that are providing our client engagement team that provides direct support to clients, our operational teams that help with onboarding clients, fraud that's tied to like level of transaction activity, fraud operations team. So a lot of these operational teams, these, we think, what are all the different levers that we can have in place? What's the playbook that we can have in place, both for when we start seeing these volume increases to like increase the size of that team very quickly? How flexible can the teams be from that standpoint? And then, of course, what can we look to like push even more and more towards automation, AI, all these various different pieces that well, frankly, again, puts you in a place where they, scale much more quickly than being able, than having to add a lot of people. But inevitably, that's kind of like we call them, like the volume-based, part of our team that's really tied to them. And then there's some others that are like not quite as much so. I mean, if you think about like product and engineering, like yes, there's more demand and there's more opportunity to build new products and so forth. But like, frankly, like adding team members here is an even it's just more time lag, right? So I mean, it's not just to recruit an engineer is a significant amount of time to make sure we get fantastic talent in, but get them in, train, integrated in the team, performing, all these types of things. I mean, by the time a lot of those things happen, I mean, you're well into the bear or the bull cycle anyways, right? And so you're almost looking at. So I think it's like, for those functions, or those parts of the business, I mean, ideally, from a culture standpoint, talent standpoint, retention standpoint, you ideally find a way to be much more balanced in how you grow there. I mean, even potentially adding people still in a bear market to grab opportunities
Yeah.
that are out there, where other companies might that took a different approach might be struggling more so.
Yeah.
And so, yeah, I mean, I think there's a lot to be said for basically handling these challenges on both sides and getting the recipe right. And I think it's one thing that we actually, we've certainly learned a lot over the years, having done it. I think it's like, frankly, it's kind of in and of itself a differentiator. The fact that we have this at this point, I would say, much more figured out than really a lot of other companies out there.
Yeah.
So.
There was the Coinless CEO tweeted this, I think it was this weekend or something, and sparked a nice little Twitter conversation. He said, having talked to a number of founders and CEOs recently, interesting that it's universally agreed upon that the worst people to hire are crypto natives, and the best people from outside who build an active interest and respect for the space are the best people to hire. And I could not disagree more with him, actually. I,
Yeah, this is quite
I would
interesting.
take the exact opposite take, I think, and I'm just
Yeah,
well, maybe I shouldn't have said my take because I want to get I'm
yeah.
curious what you think about that.
But you care, but it sounds like your mind's made up on this one. Yeah.
I mean, my mind's made up, but I'm curious for other operators. Like, how do you think about there's a trade off when you hire. Every time you hire, there's
Oh
like,
yeah, yeah.
do you hire with experience? They have experience, but they don't know crypto, or they know crypto and they don't have as much experience. And
Yeah.
sometimes you can find the third, like the coveted unicorn where they have both, but oftentimes
Yeah.
you're making that trade-off. And I'd be curious how
Yeah.
you think about that trade-off.
Yeah, so I mean, there's so many different dimensions on how to break this down. So first off, on like crypto expertise, this is this is one of our operating principles, one of our four main operating principles that we lead with. This is one of our values. Even I mean, it shows up in our culture document that our culture is based on kind of crypto ideals. So it's like it is like incredibly meaningful to us, and absolutely we think that it is important to to be top of our game and in top of the industry with regard to crypto expertise. I do think it comes in both forms. I mean, I absolutely think it comes in the form of people that have been in the industry for a long period of time, for sure. I guess you and I are roughly in that boat, right? And we have a lot of people at Kraken that are in that boat, and I do think there's absolutely a piece of this, but there's nothing that I enjoy more really than like seeing someone who comes into Kraken who has a ton of belief in the mission, interest in crypto, but is hey, their expertise level isn't the same as someone who's been in crypto for 10 years, but they're really interested in diving in with everything they got to to build expertise and understand the industry, and they're doing it even on their free time and all these types of things. I think that is really special as well, and what I would very much like to see what I very much like to see at Kraken. And so I think it's a combination of the two. Like, yeah, I mean there may be some other expertise you get in other industries and so forth, whether it's someone who's was in TradFi and saw the light and is ready, knows that fiat is on its way out and crypto's on its way in. I mean, we see that for sure. And I think so there's a number of people I would say from like a number of different groups and backgrounds, but like hopefully the one consistent piece is that everyone is really bought into our mission, driving forward to learn and consume as much as they can about crypto and industry and education and everything.
Last two questions before I let you hop here. Just maybe zooming way out and just thinking about the cycle as we know it. Just curious to get your take because you've been in the industry for so long. Every cycle ends with some big blow up. Like the last cycle, I think you could say
Yeah,
was maybe the 2017 cycle was like the ICO blow up. Um,
yeah,
27 last cycle was probably I would call it like a leverage blow up with like
yeah,
Celsius and BlockFi and Terra
yeah,
Luna in actually some ways was like a leverage blow up. Um, and then FTX was just a fraud, obviously. But
yeah,
do you have any like early signs of what you think like could be the like things that you're paying attention to right now where you're like, looks good when numbers going up,
yeah.
or like that seems like the scary thing?
Well, that's about what you can do at this point in time. Often is like, okay, well, look where things are like really going up, and then and then you get to this place where it's like, oh well, they're potentially really going up because there is something there, and it is really interesting. But then it gets to a point where it's like, okay, things have gotten ahead of itself, ahead of themselves, and therefore it's there's leverage kind of crept in or whatever it is to the system. And so I don't know. I mean, this cycle, where are we really seeing the activity? I mean, I think there's like all this, there's a lot going on with all L2s and scaling and kind of new applications on that front. There's a lot going on with restaking in some of these various different new mechanisms with restaking. Still some activity with like stable coins, both kind of on chain algo stable coins or whatever. So look, I mean, I think probably the real answer though is I don't think it's like really clear though what like the big kind of like catalysts and drivers are of growth for this ecosystem, and probably even less clear where there's potential for something to really get ahead of itself and come crashing down. We're still frankly early. I mean, we just hit the halving. So if we do repeat this 4-year cycle, we're still quite early. So we'll
Yeah.
we'll kind of see how things play out.
Last question. what is your expectation of like how long this cycle lasts and what this cycle looks like?
Yeah, it's interesting. I've definitely heard cases to be made on both sides of the spectrum on this one. Like, oh, you know, we're starting earlier now. We hit the all-time high before the halving. We're gonna the cycles of like increasingly kind of like front run each, the previous one, which somewhat makes sense that, traders, investors lean into the cycles, if they expect it to come, they'll lean into it earlier. So I've certainly heard that. There's also a dynamic that like each cycle is a little bit more muted than the previous one, so the high is not quite as, the new all-time high is nowhere near is significant of multiple of the previous one as the cycle before, and so on and so forth. And similarly, the pullback isn't as significant. And so that kind of like leads you, that set of logic leads to a place where it's like, maybe it'll just be a bit more muted, just kind of maybe last a little bit longer, but not be quite as crazy and so forth. So look, I think this dynamic that we, are leaning a little bit earlier into the cycle now, is probably meaningful. And, we already have the ETF catalysts, which I think are kind of just a mini catalyst, if you will. I think there's going to need to be like, something like bigger, probably on chain, some of these different things really getting meaningful to, drive, even more adoption going forward. And so, yeah, I think that's probably where we'll head.
Nice. Dave, pleasure, man. This has been great.
Yeah, likewise. Great connecting with you here. I really appreciate it.
Yeah, enjoyed. All right, be well, man. Talk soon.
All right, thanks.
Hey everyone, Jason here. Thank you so much for watching today's episode. Wanted to take a quick second to thank today's title sponsor, Arbitrum. We know you are tired of on-chain experiences that have unaffordable fees and frustrating transaction speeds, and that's why we partnered with Arbitrum. You can experience frictionless trades, lightning speed, and lag-free transactions, all for pennies per transaction. Explore Arbitrum's expanding ecosystem at portal.arbitrum.io. That's portal.arbitrum.io. See you for the next episode.